Hi everyone, this is Ali Hussein Kasim, and this is Ali Talks Tech. Welcome to this week's roundup of tech news across Africa. There are around 4 key interesting developments across Africa that I want to share with you guys. And then I want to share the underlying conversation around this news. And I will then talk a bit more about some of the fintechs in Kenya specifically and some in Nigeria that are going to be impacted or will be impacted with some of these conversations that are going on. So number one, Tigo, Celcom, and MasterCard partnered to launch online digital payment solutions in Tanzania. Celcom is arguably the leading fintech in Tanzania. Tigo is a telco in Tanzania, and of course MasterCard is one of the leading payment and card platforms across the world. Number two, Central Bank of Nigeria wants NIBS, that's the Nigeria Interbank Settlement System, to control access to open banking infrastructure. So a couple of weeks ago, the Nigerian Central Bank announced the start of the implementation of an open banking infrastructure platform across Nigeria. And what this basically means is the ability for different players in financial services to work together, fintechs, banks, credit reference bureaus, to be able to share data and for customers to be able to actually move their accounts from one bank to another, from one fintech to another. That's the promise of open banking. But now the Nigerian Central Bank wants NIBS to control access to that open banking. What does that mean? Number 3, PayMob teams with IKEA, Egypt, to offer more ways to pay. Number 4, Stables announces big name partners to improve physical and online digital asset payment offering. Now, what's a common theme on these important news coming out of Africa? If you're wondering, the theme is basically all these players, most of them at least, have a certain level of approval from regulators and mostly in the central banks of this country. What does that mean? What does that mean for fintechs across Africa? If you followed me, you have heard me talk about how important it is for fintechs to start understanding and appreciating that financial services is one of the most regulated industries across the world. And it's not going to be different in Africa. Let's look at some of the most successful fintechs across Africa and how they have navigated the policy and regulatory conversation. I'm going to pick 4 or 5 players. Number 1, Cellulant. Number 2, Pesapal. Number 3, Fingo, which is a very new neobank that is aspiring to cater for the youth across Africa. And number 5, of course, Flutterwave. Cellulant today is in 35 African markets. Out of those, 18 of them are regulated formally by central banks across Africa, and the rest either through partnerships with banks or awaiting approval by regulators. Number 2, Pesapal is in 3 African countries, Kenya, Uganda, Tanzania. And Pesapal is one of those gems that you probably have heard but are not sure how they're doing. I was privileged today to visit Pesapal's campus somewhere in Nairobi, and I was astounded by the immense progress this fintech has made under the leadership of Augusta Lyko. This is a fintech that you would be hearing a lot more of in the coming years and probably coming months. PesaPal is regulated by the Central Bank of Kenya, Central Bank of Tanzania, and Central Bank of Uganda. And they have grown tremendously in the last couple of years. Number 4, Fingo. Fingo is an aspiring neobank that has received the Central Bank of Kenya's imprimatur to operate a couple of weeks ago. How's Fingo done it? Fingo aspires to be the bank of choice for Africa's youth. They have cleverly partnered with one of the largest banks in Africa in terms of footprint across Africa, and that is EcoBank. And that imprimatur to operate in Kenya has been given to them through EcoBank. So these are 4 interesting plays, and mostly in Kenya. How about Flutterwave? Flutterwave is arguably the largest fintech in Africa in terms of market value. Now, Flutterwave has taken a bit of a different path towards their growth. In some cases, has been a bit controversial, but we are seeing in recent times they have been focused in making compliance and regulation a key component of their growth going forward. They have hired some top guns across Africa when it comes to compliance. They have just received a license, 2 licenses actually, in Rwanda to operate in Rwanda as a money transfer platform and also as a payment service provider. Why am I focusing on this question of regulation when it comes to fintechs in this week's conversation? I've started with interesting stories, which I have mentioned. Now, if you go back and look at those stories, all the stories have a background in the fact that all these players are now regulated by their central banks or have received permission to operate in those, in those markets. This is very, very important for fintechs to grow. There's a huge future for fintechs across Africa. Banks will never fill the gap of the so-called unbanked. But some interesting statistics are also important to mention. According to a World Bank report, there is a $350 billion deficit of funding for micro, small, medium enterprises. The fact of the matter is that most of these micro, small, medium enterprises are not going to be funded in the traditional way. They're going to be funded by players that understand how to play with data, understand how to read with data and glean specific useful insights to be able to serve these micro, small, medium enterprises. I would like to pay homage to some of these fintechs that have been able to navigate this really tough environment and be able to actually prosper and grow. Some of these fintechs are more than 10 years old. They have operated under very tough conditions. They have operated sometimes with a lot of oversight where they were not regulated, but they had to ensure that they have compliance really embedded in their operations. And we can see how they are prospering today. How would upcoming fintechs who are new into the market navigate this space? one of the key areas, of course, is to look for partnerships and beef up your compliance teams from the ground up. Now, I hear some of you in the background might be saying, but Ali, we don't have the funds to do this. Compliance is a big issue. It's big and it's an expensive issue. The fact of the matter is that we don't have shortcuts. As I said, financial services is one of the most regulated industries in the world today. So as we grow, as we look at increased growth and penetration into markets, we must also pay a lot of attention on compliance matters. There's no shortcut about that. And there are ways to be able to do this. The Association of Fintechs in Kenya, the Africa Fintech Network, is working towards ensuring that some of these policy and regulatory matters become easier for upcoming fintechs. Guys, that's all for this week. I look forward to talking to you again next week. Thank you very much.